All right, welcome to The Explainer. Today we're going to break down one of the most powerful and honestly most misunderstood tools in all of business, the master budget. We're going to see exactly how smart companies create this detailed roadmap, not just to get by, but to truly thrive. So let's get right into it and start laying the foundation.
So let's start with a really simple question. Could you build a house without a blueprint? I mean, seriously think about that for a second. You wouldn't just show up with a pile of lumber and some nails and hope for the best, right? Of course not. You'd end up with crooked walls, a leaky roof, tons of wasted material, and a project that's not just a failure but probably a total disaster. You need that blueprint for vision, for structure, for a clear plan.
And that's the whole point right there. Running a business without a comprehensive budget is exactly like that. It is just as risky. You're essentially building blind. You're relying on gut feelings and guesswork. And you know what that leads to? It leads to chaos. It leads to different departments working against each other, resources getting thrown at the wrong problems, and opportunity after opportunity just slipping through your fingers. It's an absolute recipe for failure.
So what's the fix? What is that architectural blueprint for a business? Well, it's called the master budget. And trust me, it's the one comprehensive plan that cuts through all that noise, gets everyone on the same page, and gives the entire organization a clear, unified path forward.
Now, when you hear the term master budget, don't just picture a single spreadsheet. That's not what it is. It's actually way more powerful than that. Think of it as a master file, a collection of many smaller, interconnected budgets that all fit together like puzzle pieces. And when you put them all together, they paint this complete, detailed picture of the company's financial future. It becomes the single source of truth that literally guides every single decision for the next year.
What's really cool is how this master plan is basically split into two main parts that are constantly talking to each other. On one side, you have the operating budget. You can think of this as the profit plan. It's all about the day-to-day stuff, making things, selling things, and figuring out if you're profitable. Then, on the other side, you've got the financial budget. This part is laser-focused on one thing and one thing only: cash. It takes all that planning from the operating side and asks the really important question: okay, that's great, but how is this all going to affect our actual cash in the bank?
So you might be thinking, wow, that sounds like a lot of work. And it is, but here's why it's absolutely worth it. First up, planning. This process forces managers to stop just putting out fires and actually think strategically. It makes them look ahead and set concrete goals. Second, you get coordination and communication. Suddenly, the sales team knows what production can handle and the finance team knows what to expect. Everyone's playing from the same sheet of music. And third, benchmarking. This gives you a yardstick. It creates clear targets so you can look back and see how you actually did. It's like a report card for your business, showing you exactly where you aced the test and where you need to study harder.
Okay, let's dive deeper into that first half of our blueprint, the operating budget. This is really where a company designs its engine. This is the nitty-gritty of planning how you're going to make money, what it's going to cost to do it, and hopefully what your profit looks like at the end of the day.
Now, if you remember one thing from this whole explainer, make it this. Everything, and I mean everything, starts with the sales budget. It is the absolute foundation of the entire master budget. Every other plan, how many people we need to hire, how much raw material we should buy, how many shifts to run in the factory, all of it depends on one single forecast. How much stuff are we actually going to sell? If you get this number wrong, the entire blueprint you've built on top of it is basically worthless. It's like building a skyscraper on a foundation of sand.
And this slide just perfectly shows what we call the cascade effect. Just look at the beautiful logical flow here. It's like a set of dominoes. First, you forecast your sales. That number then dictates your production budget, how much you need to make. That number then tells you what you need for your direct materials and labor budgets. All of those costs, plus your factory overhead, roll up into your total manufacturing cost. And finally, after you account for all your other operating expenses, all of these pieces come together to create your projected or budgeted income statement. See, each step is a direct result of the one that came right before it.
Okay, so we've designed our operations. Let's move on to the second part of our blueprint and see how we build a solid financial foundation. We've made a plan for being profitable, which is great, but now we have to make a plan for our cash. Because as you're about to see, being profitable and having cash are two very, very different things.
You know, this right here is a concept that trips up so many entrepreneurs and even experienced managers. It's a massive stumbling block. You can have a month where you sell $1 million worth of your product. On paper, on your income statement, you look like a genius. You're wildly profitable. But what if all of your customers have 90 days to pay you? You have to pay your rent, your suppliers, and your employees this week. You can be profitable and bankrupt at the same time if you don't have the cash to cover your bills.
And this slide just lays out that difference perfectly. The income statement, that's your report card for profitability. It includes weird things called non-cash expenses like depreciation. Depreciation is really just an accounting trick for spreading out the cost of a big machine over its useful life. No actual cash leaves your bank account each month for depreciation. The cash budget, on the other hand, is all about liquidity. It's about survival. It ignores accounting tricks and only tracks one thing: real, actual cash coming in the door and real, actual cash going out the door. It's the true heartbeat of the company.
So how do you actually get a handle on that cash flow? Well, you use a specific set of tools from your financial toolbox. You've got the capital expenditure budget to plan for big purchases, like a new factory or new computers. Then you've got your cash collections budget, which forecasts exactly when you expect customers to pay you. And of course, the cash payments budget for when you have to pay your own bills. All of these get rolled up into the big one, the combined cash budget. And from there, you can finally put together your budgeted balance sheet, which gives you a snapshot of your company's overall financial health.
After all of that planning, all of that forecasting and calculating, it all boils down to this one single, absolutely critical number: the ending cash balance. This one number tells you everything. It answers the most important questions a CEO can ask. Do we have enough cash to make payroll? Are we going to need to take out a loan next quarter? Or, the best question of all, do we have extra cash that we can use to pay down debt or invest in growing the business? Everything rides on this number.
So we've done it. We've built our master blueprint, we have the operating plan, we have the financial plan, but let's be honest, a plan is totally useless if nobody actually follows it, right? So how do we make sure the entire business stays on track and that people are held accountable for their part of the plan? Well, the answer is something called responsibility accounting. This is the system that connects the numbers in the budget to actual human beings. It's a framework designed not just to track performance, but to formally evaluate how different parts of the company and the managers who run them are doing against the specific goals that were laid out in that master budget. It's all about accountability. And what's really fascinating is how this system breaks the company down into these different responsibility centers. For example, the manager of a cost center, like the HR or accounting department, is really only responsible for one thing: keeping their costs in line with the budget. Then you have a revenue center, like a regional sales office. That manager is judged on bringing in revenue. A profit center manager has more on their plate. They're accountable for both revenues and costs. Think of someone running a whole product line, like beverages. And then at the very top, you have an investment center manager, like the head of the entire European division. They're responsible for everything: revenues, costs, and how efficiently they use the company's assets to make a profit. Now, a core part of making this whole system work is a brilliant idea called management by exception. This is such a powerful technique. It basically means that top-level managers don't waste their precious time reviewing every single thing that's going according to plan. Why would they? Instead, they focus their attention only on the exceptions, the big variances, the areas where results were way better or way worse than the budget predicted. This allows them to focus their energy where it's needed most, on solving the biggest problems or figuring out how to replicate the biggest successes. So at the end of the day, this system of accountability is what transforms the budget from a simple document into a living, breathing management tool. When you assign clear ownership of goals, you give people something to aim for. When you create a fair system to evaluate them, you motivate them to hit those targets. And that is how top leadership actually controls a massive, complex organization and steers the entire ship in the right direction.
So, as we've seen, the master budget is so much more than just a bunch of numbers on a spreadsheet. From that very first sales forecast all the way through to managing your daily cash flow and making sure every single manager is accountable for their part of the puzzle, it really is the comprehensive roadmap that guides a business from where it is today to where it wants to be tomorrow.
And that's really the final thought I want to leave you with. Your budget isn't just a plan, it's a promise. It's a promise you're making your employees about their future, a promise to your investors about their return, and a promise to your customers about the value you're going to deliver. So, I'll just leave you with this question to think about. What promise is your plan making? And more importantly, how are you going to deliver on it?